Paul Moore from PM Capital, welcome to the Equities and Growth Symposium.
Thank you.
Can you explain the basic premise of PM Capital's investment philosophy?
Yeah, look, it's pretty simple. We sit back and look for the genuine long-term valuation anomalies. It's basically buying bottom quartile valuation and selling top quartile valuation.
And how has investing, or even value-oriented investing, evolved in your career?
I don't think it's changed. To be honest, what I talk about in my presentations today is exactly what I talked about back in my first presentation in 1986. If anything, what I've observed is the industry has moved further away from fundamental investing, more process investing, passive ETFs, ESG. Now the reality is that creates opportunity for long-term investors. You just have to be more patient.
And patience isn't really known as being, that common in investment markets. Can you expand on the kind of processes you have to, remain patient?
Yeah, look, it's hard, but I think experience comes into it. In that I've seen many cycles and just watched, the really good investment opportunities. When you find them, they usually take 2 or 3 years of sort of people questioning them. Then they start to slowly evolve, and then over a period of 5 to 7 years, they start to re-rate, and then by the 10-year mark, they're overvalued and you can sell them, and it just happens over and over again. So, history has taught me that you have to have a genuine long-term horizon, and to be honest, I think that's the only way you can genuinely add value in these markets.
And where do you think the biggest risks are for equity investors in the next few years?
Well, I think at the moment it's more geopolitical. We can see Ukraine, inflation. Will they get it under control? Will it get out of control? And associated with that is the big withdrawal of liquidity that has to happen. And the reality is no one knows any of those factors, how much it's going to impact valuation and sort of what happens within different sectors. So that's why we always say, look, the reality is we have our views on it, but you want to focus on valuation, because if you buy valuation correctly, that is the best protection.
And where are you seeing the greatest opportunities, either sector or country or company specifically?
We've been pretty firm the last 18 months that post-COVID, the best opportunities were in the so-called value sectors of the market, but really companies that can handle the emergence of inflation. And so probably the classic example is European banks. The worst hit by deflation and low interest rates, they'll be the greatest beneficiaries if that trend continues to inflect. But again, it's going to take time, so you've got to be prepared to invest for the next 10 years. But if you ask me, where's my highest conviction in a sector, that would probably be it.
And what's one of your highest conviction ideas within the portfolio at the moment?
As I said, I think the banks, and the reality is you could buy a portfolio of banks is probably the best way to go, because they're pretty generic in the nature of the business. That would be my highest conviction because they're so heavily discounted. But the casino stocks that are being impacted by COVID in China probably got just as much upside, but less conviction because China risks. And there's a number of other value sectors that are quite interesting, but I'd go back to the European banks.
Can you explain the idea of a crowded trade?
Yeah, it's interesting. It basically means everyone owns the same stock or industry sector. And if you look at portfolios over the last 18 months, it's amazing on the global scene when you look at their top 10, how much commonality there was. And in my mind, the markets have never been more backward-looking, process-driven. They're all using the same tools to get the same result, and that's why they end up in overcrowded positions. And that's why you get a Facebook or a Netflix falling 30% overnight on simply mentioning something about their forward earnings expectations, because everyone owns the same stock.
Paul Moore, thank you.
Thank you.